Good weekend all. Ira Epstein with your Spider ETF video, your weekend edition, and this is for Friday, June 5th, 2020. Well, you don't need me to tell you that the market soared today just monstrously, and it had to do with the unemployment rate. And very simply put, the market was looking for a big increase in jobs lost. Instead, what happened? The market actually had a gain of 2.5 million instead of an 8.5 million loss. And we went from a 14.7 unemployment rate, and they thought it would go to 19.5 or 20. Today, I even heard whispers of 25%, instead down to 13.7. Market wasn't ready for that. And away it went. How much wasn't the market ready for it? The president held an impromptu news conference right away, of course, and rightly so, doing a lap of pride. You know, the governments came together, be it Congress, give them an applaud too. They throw out a lot of programs. It's hard to get both the Democrats and Republicans to do anything together. They did it. We saw the Fed rescue the markets back, and the president, you know, he's, as much as he can do with his executive orders, he's done it. So, whew. You know, you're knocking on the door in the NASDAQ of an all-time high. It's hard to believe that. But as you can see behind me, the metals got hit, the silver, the TLT, interest rates higher. You can see gold, GDX, GDJ, pot stocks got hit. I think they should have been smoking happiness, but they didn't do that. So let's take a look at the tech sector. We know the market has been running off of tech. It's been doing it for a long time, and this is just one of the most unbelievable bounces I recall seeing. I mean, it doesn't even pause. It just ran. Now, you filled the gap. That's what you've done now. Are you going to make a new high? Maybe. But I have trouble on a move like that just jumping into it. That doesn't mean you shouldn't. I have a problem. Generally, markets give you a consolidation phase. None. You've got the pattern of higher lows, higher highs, and I don't have to tell you, you know that 102.94 is going to be the resistance, the all-time high. The market's over the 18-week average, bullish. It's over the 100-week and the 200-week. Everything's bullish on that setup. The Bollinger top is way above this 102.94. It's another $5 over at 107.32. And frankly, other than that high, it would have to form something on its own. That's just a logical number. And the way that the curvature of the Bollinger Band's going, it's going to climb early on Sunday night. It'll drop data back here and add data. That's how the algorithm's going to work. When we come over and we look at momentum, still pointing up. So on the weekly charts, everything's bullish. You'll know that you've run out of that upside momentum and you're going to get into that funky back and forth action if you take out one of these past lows like 94.33. When we come to XLI, the industrial sector, well, one of the things I've been preaching on my daily reviews is that, and I've been doing it for 2 weeks, I said, folks, we're starting to see rotations. And that's what I think's going on. That the tech sector, yes, and I said that, it's not, don't look for it to fall, that's not what I'm saying. It's going to give up the leadership and the others will carry the day. And that's what's going on here. So you've had this heck of a run. You've gotten first past the 200-day, now the 100. But you don't have that bullish pattern. You have a runaway. You have a vertical price rise, a melt up. You've gone from 56.97 lower and low, higher high, right on up here to 76. So this market has gone up rather dramatically in no time at all. What a 40% gain. When we look at the energy sector, I'd be very nervous. I'm looking at charts on these, and if you run the daily, run your 150-day moving average. I don't often use it. I saw today Carter David was using it on the energy sector and other parts of the energy complex, and I was going like this. I go, darn it, that's a good number. Seems to fit in where you're getting some resistance. I use my mainstays, which are my 200, my 100, and my 18. I mean, you can find averages that always fit into something, but that 150 worked into the whole energy circuit, and it's right above this market. So be a bit careful there on the dailies, not the weeklies. When you come to QQQ, it's just been the run to the upside, new high close. So everybody that has a short position is wrong. Pretty interesting, isn't it? Everybody. When you close at the high, I mean, there's just nobody for all purposes that has a profit on the short side. Will the market make it to the 251.75 Bollinger Band to peak out? Why not? Until it's over, it's not over. It's that simple. Momentum up, bias up, trend up. When you go to the emerging markets, now this is the resistance. I've been telling you on the daily charts, I'm seeing more and more resistance here. You're into it. Now you hit the 100-day and you're hitting maybe the 200. Doesn't mean you can't just keep going, but I would be surprised if the markets aren't, with all this euphoria, ready for a week where some money comes off the table. How many people got caught and this market's come all the way back for them in many, many of the things they own, and they might be saying, okay, the sell April go away didn't work. Let's understand this. That break in March where so many of the big mines, I don't have a big mine, but I also thought it was going to be retested. That's done. And how much money hasn't been invested. So you've got two elements here. You've got elements that are saying, hey, maybe I should come out of this market. You have the other element that maybe didn't get in, and now they're looking for ways to do whatever they're going to do. And you have a third element that's looking at whatever they think the valuations are, like 24, 23 in the S&P, if that's where we're at about tonight on the price earnings. It's pretty high. When you look at the gold versus everything else, well, it's still over its 18-week average. It's now in a correction phase. You've got the pattern of lower highs, lower lows. You have an outside week down. The market lost, like the stocks went up 5%, this lost the 5%. And think about it, if people have a risk-on mentality, and we talked about that during this whole week, why do they want to own gold right now? It's risk on. They don't want to own the yen. They don't want to own the dollar. They don't want to own the gold. And you're seeing that at this point. Support back at the 155.21 level. If you were to take out this week's high, that would give me an idea that the market's completely overdone everything and maybe it's ready to go back to the 169 level. But what would cause that? I think it would have to be an outbreak of COVID again in order to do that, something that I don't know yet is out there. In the gold miners, you know that on the daily charts, you saw them go to the lower Bollinger Band. Just like the gold futures, you now have lower highs, lower and low, and outside week down. So you pay attention. If you take out this high in this week coming up or the week after, that'd be a trap for bears. Barring that, 29.51 might be the target. The market's also got momentum now turning to the downside. TLT's in a downtrend, and I showed you on the futures wrap-ups each day this past week, I said it's a breakout to the downside in the futures, and I'm talking in the notes in the bonds that I was showing. Well, this has joined it, okay? Now, how low, I don't know. The Fed's job, and we have a Fed FOMC meeting this Wednesday, the Fed is not going to come out and try to get interest rates to go higher. I don't know how much they'll talk them down, but what good does it do throwing all this money and then the tightening policy takes away the benefit? So you got to be a bit careful right here is what I'm saying. In FXE, we saw the European Central Bank throw the kitchen sink again at everything. They've thrown it already, so they just keep saying they're going to buy more and more, but this time they got help. Germany came to the rescue, the most austere country, threw out the word austerity, got the two ruling coalitions within there in the politics to agree not to 100 billion euro currency package, 30% more than anyone thought, and look what it did. It just sent the market off to the races. All you had to do is look at the fall in German manufacturing to understand. They realized the problem, and just thinking time will take care of it isn't going to do it. Our president's again looking at Europe, code word Germany, for autos tariffs. So he's bringing that up. And remember, what President Trump does is as things get better for us, he uses that whip he's got, those tariffs. You'll hear that over the weekend when you start reading financial news. You've got momentum up, bias up, but you have hit an important zone of resistance. In the jets, now this is the airlines. You know, Boeing has just run away. I don't know if you've been watching American Airlines and some of these. I don't know that these values make sense that they've gone back up to, but away these markets have gone. People believe that it's just going to turn on. I know if I wouldn't get on a plane right now for anything. I don't believe that anything's safe just yet. I will go with all the doctors that we watch on TV telling you, be careful. But yet the market is saying it's going to pick up. It believes that the freight business and everything, the terminals and all, more and more business. So you can see how this is doing as well. This is, by the way, a daily chart, not a weekly, even though I've got the weeklies on the other. Just wanted to keep it up since I brought it up yesterday. You know, remember what I do in the afternoon. I've already done this for my subscribers. I put out ideally before 4 o'clock, I try to get it recorded, a SPDR ETF video for the next day's trade. And I'm going to cover in it about 35 charts now, 30 some odd, because I just added jets and I keep adding other things to it. And the whole goal here is to give ideas on what I'm seeing in the market. Now, in the weekend edition like this on YouTube, you're getting the weeklies. But my charts will be daily. I say 27. We just haven't had time to change our ad. I'll get the right number up there this month sometime. But you're going to get first. What you get is a touch of what I'm seeing in the fundamentals. Then I'm going to prep you if there's a big report coming out, what to be careful of in the morning. And then I'm going to walk you into the chart. And I'm going to cover all these sectors. And as I said, I've added more. I think we now have 3 or 4 interest rate ones. We certainly have UNG here. We just keep adding. And that's the idea, giving you enough that you can get a good feel for what's going on. When I'm saying buy here, sell there, be specific, you're going to pay me to do that, all right? So if you like the free stuff, this isn't for you. If you want more depth, this is for you. It won't break the house. $8.95 to give it a try. You're not committed to any contract of any type. And I am going to put a package together now. So I told my IT department now to build it of the SPDR and ETF along with the morning futures, because they should tie together for you, and we'll give a price break on that as well. So if you'd like to do this, go to our website, go up to the word research, you can get everything you need right there. I'm Ira. You have a great weekend. I'll see you all come Monday.